Well, hi everyone, I'm Rusty Dunn here with Chief Financial Officer Andrew Bonfield here to talk about Caterpillar's second quarter financial results. Andrew, good to see you as always.
Great to see you too, Rusty.
Our regular quarterly meeting, as
Yes.
it were. Give us a headline for this quarter, Andrew, and perhaps trends that we're seeing.
It was another solid quarter, Rusty. Sales were about in line with our expectations. Both adjusted operating profit and adjusted operating profit margins were slightly above our expectations. And we continue to see strong orders across our segments. Effectively, demand remains resilient, supported by infrastructure spending and growing energy needs.
Talk about being resilient. Why is that important?
Well, it's important because obviously we have to operate in the macro environment that's out there. Obviously, as you look across the industries we operate in, some of those are in different operating conditions than others. And also there's global economic headwinds out there as well. So it's being able to operate across all of that. And we're very pleased to see the increase in our backlog and orders across all of our segments, which is puts us in a really strong position as we go through the rest of the year.
Well, let's turn now to some of those numbers. We'll start top line, sales and revenues. Andrew, where'd we land there?
Well, sales and revenues at $16.6 billion were down 1% versus the prior year. We saw price having some impact on the top line, offset by higher volumes. Overall, our sales to users was strong, which is good as we move forward.
So that's top line. Where we come down with the bottom line?
Well, overall, profit per share was $4.62, which was down 16% versus last year. Adjusted profit per share of $4.72 was down 21% versus last year. The decrease is mainly a factor of unfavorable manufacturing costs, largely reflecting the impact of higher tariffs and a little bit of the price that I mentioned a moment ago.
And it's always interesting to look at it from a segment perspective. Give us our highlights there.
Yeah, so overall, energy and transportation, which is now our largest segment, grew sales by 7% to $7.8 billion. Higher sales volume and favorable price drove that. CI sales decreased by 7% to $6.2 billion. We're about in line with our expectations. Most of that is price. We've got a number of merchandising programs in place, and that helped to make sure that actually CI sales to users, which are underlying sales, actually grew in the quarter. And in resource industries, sales were down 4% to $3.1 billion, and that was mainly driven by unfavorable price.
Well, Andrew, I think we'll follow up then with looking at how cash was generated, how it was deployed, and where we're at there.
Yes, overall, free cash flow was about $2.4 billion in the quarter, which was down slightly versus last year, mainly due to higher capital expenditures. We deployed about $1.5 billion back to shareholders through a mixture of share buybacks and dividends. We actually increased the dividend by 7% in the quarter, which is the fifth consecutive year of high single-digit increases in dividends. And we still retain the strength of our balance sheet. We continue to have an enterprise cash balance of about $5.4 billion. And in addition, we have about another $1.2 billion in longer-dated marketable securities.
It's always a complicated global environment, so I might get a couple of thoughts from you on the current macroeconomic environment and how we're looking at it.
If you look across each of our segments, the business demand overall actually has been very positive if you look at it compared to what our expectations were at the beginning of the year. So we're actually increasingly optimistic about our outlook. We actually now believe sales this year will grow slightly more year over year, which is better than we expected at the beginning of the year. So that's a positive indication of the underlying demand for our products across the markets. From a profitability perspective, there is a headwind relating to tariffs, which will impact us for the remainder of the year as well. And that is something where we have some mitigation actions in place, but over time we need to put more actions in place to mitigate that impact as we move through beyond this year.
Very good. Well, let's head beyond the numbers here for just a second. And you recently had a chance to go to Akashi, Japan, where we design and manufacture hydraulic excavators for our global customers. Incredible place.
It is, and also it's incredible to believe we've actually been doing that for 65 years in Akashi. So that's the great thing as well.
Well, let's take a look.
Hello everybody, today I'm at a Akashi facility here in Japan with Nobumi Chiyosan. You're the VP of Operations for Excavation Division. Can you tell me about what we build here in Akashi?
So here in Akashi, we predominantly build the hydraulic excavators for Caterpillar, and we do everything from a 12-ton machine up to a 52-ton machine, so 312 up to the 352.
And the machine behind us is a 320. That's one of the largest volume machines we produce here.
Yes, it is the largest volume machine that we produce, and it's the largest volume machine that we produce across EXD and our largest seller.
Okay. And what actually was here was you actually developed the next generation excavators, if I'm correct, that was started here in Akashi.
Yeah, so in around 2013, 14 or so, we started the development for the next gen hex, the NGH as we call it. And we released the first NGH model, the 320, in October of 2017.
Akashi is one of our more efficient, effective plants. How do you make sure that happens from an operational perspective?
So Akashi has a lot of history, and so there are a lot of processes that have been developed year over year, and the idea of continuous improvement is something that is deeply embedded in Akashi. And it's not just within the four walls of the operations, but it extends out to engineering, the way we collaborate in engineering, the way we collaborate with our suppliers, and there are some really, really unique things in Akashi that helps that overall value chain be efficient.
And engineering actually is based on the site as well. We have the hydraulic excavator engineering development center here as well, don't we?
Correct. We're co-located here, and we've been co-located pretty much for the whole history of Akashi, and so there are a lot of different areas that we collaborate very, very closely with in order to develop a machine.
And that development was also helped by the fact we have a proving grounds nearby as well.
Correct. We have the Ono Proving Grounds, OPG as we like to call it. That's a dedicated proving grounds for excavators.
Yeah. And it's a significant anniversary this year in Akashi. It's the 65th anniversary of the plant?
Yes, so the plant has been here for 65 years, and it coincides with the first hydraulic excavator that was ever manufactured in Japan, and it was actually manufactured here in Akashi.
Yeah. And it's been 65 years of great success.
Correct, absolutely. So there have been generations over generations of different machines that have been built here in Akashi, and you can see the evolution of the excavators just by being here in Akashi.
Yeah, it's fantastic, and I really appreciate your time, really appreciate the efforts of the team, and congratulations on the 65th anniversary.
Thank you, Andrew.
I mean, wow, 65 years in Japan and the very first hydraulic excavator ever manufactured in Japan. It's a great story.
And it is great, and it's such an amazing piece of equipment to see, and they maintain it so well as you would expect. It's really, really great to be able to see that and that piece of history from a Caterpillar perspective.
Nice. It was a nice trip. Final thoughts, perhaps, as we've finished out this last quarter.
Yeah, we just have to keep focus. I mean, there's a lot of noise out there in the system, but there's very strong demand for our products. Keep focused on the customer, keep focused on delivery, and let's keep executing well. That's the best thing that we can do.
Andrew, always appreciate being here with you.
Thank you, Rusty.
And to all of you, thanks for joining us.